Welcome to the most difficult journey in your financial life, the climb towards your first $100,000. Many people believe that wealth is a linear path, but the reality is much more grueling and unforgiving. The first 100K is not just a number on a screen, it is a psychological and mathematical barrier. Charlie Munger once famously said that the first 100K is a total struggle, and he wasn't exaggerating the effort. Why is this specific milestone so much harder than going from 100,000 to 1 million? It comes down to a fundamental law of the universe, the law of inertia and the physics of money. When you start at zero, you have no momentum, no passive growth, and no safety net to catch you. Every single cent you save in the beginning is earned through the sweat of your brow and manual labor. At this stage, your money isn't working for you. In fact, it feels like you are a slave to it. You are fighting against inflation, lifestyle creep, and the crushing weight of immediate gratification in a consumerist world. Think of your wealth as a giant boulder at the bottom of a steep, rocky mountain path. To get it moving, you have to push with every ounce of your physical and mental strength. Once it reaches the top, the 100K mark, the slope begins to level out and eventually work in your favor. But until then, the gravity of your bills and your past habits is constantly pulling that boulder backward. Most people quit during this phase because they don't see the results of their intense labor immediately. They save for 6 months, see a few $1,000s, and wonder why they aren't rich yet. They fail to realize that the compounding effect is nearly invisible during the first few years of investing. If you have $5,000 and it grows by 7%, you only made $350, barely enough for a nice dinner. This lack of feedback is what kills the motivation of the average person trying to build a future. To survive this stage, you must shift your focus from returns to savings rate and raw contribution. This is the era of aggressive accumulation, where your primary goal is to minimize waste and maximize income. You aren't just building a bank account, you're building the discipline required to manage much larger sums later. Financial literacy isn't just about knowing what a stock is, it's about understanding your own impulse control. Every time you say no to a luxury purchase, you're actually saying yes to your future freedom. It feels like a sacrifice now, but in reality, you are buying your time back at a discount. Let's look at the math of why the first 100K takes the longest amount of time to achieve. For someone saving $10,000 a year at a 7% return, it takes roughly 7.8 years to hit the mark. However, the jump from 100K to 200K takes only about 5.1 years with that same saving rate. By the time you go from 600K to 700K, it takes less than 2 years of effort. The capital is finally doing the heavy lifting, but it needs that first 100K seed to begin. This is why we call it the barrier. It is the gatekeeper that guards the entrance to true compounding. You cannot skip this step, and you cannot hack your way through it without significant risk or luck. Most get-rich-quick schemes target people who are frustrated by the slow pace of this first stage. They promise a shortcut through the mountain, but usually those paths lead to a dead end or a cliff. True wealth management starts with the acceptance that the beginning is meant to be a slow grind. You are currently in the survival phase, where the goal is to keep your head above water and keep rowing. We need to analyze the macroeconomic factors that make this harder today than it was 30 years ago. Housing costs, education debt, and the rising cost of living have made the 100K goal feel like 250K. Yet the digital age has also provided more leverage than any generation before us has ever seen. Today, we will break down exactly how to navigate these modern obstacles to reach that six-figure sanctuary. To understand why the 100K barrier exists, we have to look at the brutal math of the dead zone. In the beginning, your portfolio is too small for market returns to make any meaningful impact on your life. If you have $10,000 and the market has a great year, you gain maybe $1,000. That $1,000 is easily wiped out by a car repair, a medical bill, or a slight increase in rent. This is why the first stage of wealth isn't about investing as much as it is about offense through earning. You cannot invest your way out of a low-income problem. You must first solve the cash flow bottleneck. During this phase, your greatest asset isn't your brokerage account, it is your ability to generate high-value skills. The economy doesn't pay you for your time, it pays you for the value you bring to the marketplace. If you are stuck in a cycle of trading hours for minimum wage, the 100K mark remains a statistical impossibility. You must find leverage, whether that is through code, content, capital, or labor, as Naval Ravikant often suggests. Most people get trapped here because they try to look wealthy before they actually have a foundation of wealth. They hit $20,000 in savings and immediately celebrate by financing a vehicle that costs $40,000. This is the wheel of debt that keeps the middle class tethered to the 100K barrier for decades. Every dollar you commit to a monthly payment is a dollar that cannot go into the compounding machine. Wealth is what you don't see. It's the cars not bought and the luxury items left on the shelf. We also have to discuss the silent thief that makes this milestone harder every single day: inflation. $100,000 in the year 2000 had the purchasing power that would require nearly $180,000 in today's economy. This means the finish line is moving away from you as you are running toward it at full speed. To beat inflation, your savings rate must be aggressive enough to outpace the eroding value of the currency. This requires a war-footing mentality where you treat your finances like a strategic military operation. You need to audit every subscription, every meal out, and every small expense that bleeds your capital dry. But cutting costs is only half the battle. The real magic happens when you scale your income vertically. Look at the side hustle culture. While many are distractions, some offer a path to exponential income growth. Whether it's freelance consulting, digital products, or a service-based business, you need a vehicle that isn't capped. Your 9-to-5 job is your stability, but your wealth engine is what you build in the hours after dark. The 100K barrier is psychological because it requires you to live differently than 99% of your peers. Your friends will be going on vacations and buying new tech while you are staring at spreadsheets and saving. The social pressure to conform to a standard lifestyle is the most dangerous obstacle you will encounter. You will be called cheap, boring, or obsessed, but these are simply labels given by those who are stuck. Remember, the first 100K is the only time you will ever have to work this hard for your money. Once you cross it, the interest on that 100K starts to equal a significant portion of a yearly salary. Imagine waking up and realizing your money earned $8,000 this year while you were sleeping in your bed. That is the moment the physics of wealth shifts from manual labor to automated momentum and growth. But to get there, you must survive the valley of disappointment, where effort exceeds visible results. James Clear talks about the plateau of latent potential, where nothing seems to happen until a critical threshold is met. The 100K mark is that threshold. It is the boiling point where water finally turns into powerful steam. Let's break down a specific roadmap, the $2,000 a month challenge that can bridge the gap in 4 years. It sounds impossible to some, but through skill acquisition and lifestyle design, it is a repeatable formula. We're going to look at 3 different case studies of people who broke the barrier in record time. Their stories prove that the barrier isn't a wall, it's a test of who wants freedom the most. To bridge the gap to 100K, you must master the concept of opportunity cost, the hidden price of every decision you make. Every dollar spent on a depreciating asset is not just a dollar lost, but the future thousands that dollar could have grown into. If you invest $1,000 at age 20, that single deposit could be worth over $80,000 by the time you retire. When you look at a $1,000 smartphone through that lens, you realize it is actually an $80,000 purchase in future money. This shift in perspective is what separates the wealthy from the consumer. They see the seeds within the fruit. Now, let's pivot to the most effective way to accelerate your progress, the skill surge or rapid skill acquisition. In a digital economy, certain skills have a much higher return on effort than others, creating a fast track to capital. Learning high-ticket sales, data science, or AI integration can triple your income faster than any stock market rally. You should aim to be T-shaped, having a broad base of knowledge with deep, specialized expertise in one lucrative area. This expertise becomes your unfair advantage, allowing you to charge for results rather than just for your time. While you are building these skills, you must remain invested in the market, even if the amounts feel trivial. Constant participation in the market builds the psychological muscle of staying the course during volatility and downturns. It's easy to be a long-term investor when the sun is shining, but the real test is when the market sheds 20%. Those who panic sell at the $30,000 mark usually never make it to the $100,000 mark. They reset their progress. Think of market corrections as sales on future wealth. They are opportunities to buy more shares at a discount. We also need to address the lifestyle creep trap that often resets the clock for high earners. As your salary increases, your standard of living should remain frozen until you hit that six-figure investment milestone. If you earn an extra $1,000 a month but spend an extra $900 on a better apartment, you haven't actually moved forward. You are simply running faster on the same treadmill, staying in the same place relative to your financial goals. Discipline is the bridge between goals and accomplishment, especially when no one is watching your bank account. Let's look at the snowball effect, a term popularized by Warren Buffett to describe how wealth builds over time. A snowball starts small and requires significant effort to roll, but eventually its own mass handles the momentum. At $100K, your snowball is finally big enough to start picking up significant snow with every single rotation. Until then, you are the one doing all the rolling. You are the primary engine of your financial growth. This is also the stage where you should explore asymmetric risk, investments where the downside is limited but upside is huge. This could be starting a side business with low overhead or investing a small percentage in high-growth emerging tech. However, the core of your strategy should remain boringly consistent, the slow and steady accumulation of diversified assets. Innovation doesn't always mean complexity. Sometimes the most innovative thing you can do is stick to a simple plan. Most people overcomplicate their finances because they want to feel active, but wealth is often a byproduct of patience. The 100K barrier is as much a test of your temperament as it is a test of your mathematical ability. Are you able to delay gratification for 5 years to ensure you have a better 50 years later on? That is the question the universe asks every person who attempts to climb the mountain of financial freedom. We are now seeing a K-shaped recovery in the economy, where those with assets pull away from those without. By crossing the 100K barrier, you effectively move yourself to the top half of that K-shaped trajectory. You move from being a victim of economic cycles to someone who can capitalize on those very cycles. This gives you option value, the ability to take risks, change careers, or start ventures that others cannot afford. Your 100K is FU money in its infancy. It's the beginning of your personal sovereignty and independence. It's the ability to say no to a toxic boss or a dead-end situation because you have a runway to land on. We are going to analyze the asset allocation models that most effectively protect and grow that first 100K. From low-cost index funds to high-yield environments, your portfolio must be a fortress built to last. As we approach the final stretch of the first 100K, we must discuss the strategic pivot in your asset allocation. When you have $5,000, a 10% gain is negligible, but at $80,000, that same 10% is nearly a year of savings. This is where the velocity of capital begins to matter, how quickly your money can reproduce itself through smart placement. You move from being a saver who hoards cash to an allocator who deploys capital like a commanding general. During this transition, taxes become your biggest friction point, potentially shaving years off your retirement timeline if ignored. Utilizing tax-advantaged accounts like the 401k or IRA is equivalent to getting an immediate 20 to 30% return on your money. It is the most legal hack available to the common man to bypass the heavy toll of the financial highway. We also need to address lifestyle deflation, the act of intentionally lowering your costs even as your net worth explodes. By keeping your burn rate low during the final 20K push, you create a massive pressure cooker effect for your wealth. This is the boring middle, the part of the journey where the novelty has worn off and the finish line is still blurry. This is where most people get shiny object syndrome, jumping into crypto or meme stocks because they're bored with index funds. Stability is boring, but boredom is the price you pay for a guaranteed six-figure foundation for the rest of your life. Think of the 100K mark as the escape velocity required for a rocket to leave the Earth's heavy atmospheric drag. Below 100K, the gravity of your daily expenses is still the dominant force acting upon your financial trajectory. Above 100K, the vacuum of space allows you to move incredible distances with very little fuel or effort. Let's look at the wealth multiplier effect, how 100K invested today could easily become $1.6 million over 30 years. You aren't just saving for a rainy day, you're building a weather machine that can control the climate of your life. In this phase, your network begins to shift as well, as you start attracting people who operate at a higher financial frequency. You will find that money talks, but wealth whispers, and the conversations you have will move from consumption to production. You must stay vigilant against lifestyle upgrades masquerading as necessities during this final, delicate stage of growth. That slightly larger apartment or that reliable SUV are the traps set by a society that wants you to stay in the workforce. The system is designed to keep you at a net worth of near zero so that you remain a productive, compliant unit of labor. Breaking the 100K barrier is your first true act of rebellion against a system built on perpetual debt and interest. You are reclaiming your human capital and converting it into financial capital that never gets tired and never sleeps. As the great Ray Dalio says, you must understand the economic machine to navigate the cycles of debt and growth. Your first 100K acts as a buffer, a shock absorber that prevents life's minor inconveniences from becoming major catastrophes. When you have no savings, a broken furnace is a crisis. When you have 100K, it's just a Tuesday afternoon. This reduction in stress leads to better decision-making, which in turn leads to even more wealth. It's a virtuous cycle. We should also investigate the alpha of self-education, the returns you get by investing in your own mind and health. A healthy body and a sharp mind are the hardware that runs the software of your financial strategy. If the hardware fails, the software is useless, no matter how many millions of dollars are sitting in the bank. Now let's talk about the final push, the last $10,000 that feels like it takes longer than the first $50,000 combined. This is a psychological trick of the mind. Because you are so close to the goal, your perception of time slows down. Stay the course, do not check your balance every hour, do not change your strategy, just keep the engine running. We are seeing a rise in fractional ownership and digital assets that make hitting this goal more accessible than ever before. You can now own pieces of commercial real estate or fine art with just a few $100s through modern platforms. These tools are the force multipliers that allow the modern investor to compete with the institutional giants of the past. Your first 100K is the price of admission to the real game of global finance and wealth preservation. It is the minimum viable capital needed to participate in the highest levels of the capitalist system. Get ready, because once we cross this line, the rules of the game change forever, and the odds shift in your favor. Welcome to the final descent. You are now standing on the threshold of the six-figure sanctuary. Crossing $100,000 is the ultimate proof of concept. It proves that your system works and your discipline is unbreakable. But as you cross this line, you must realize that the early game is over and the mid-game has begun. In the mid-game, your focus shifts from "how much can I save" to "how efficiently can I protect." You are no longer just a participant in the economy. You are now a shareholder in the future of global productivity. This milestone provides a level of psychological liquidity that allows you to breathe for the first time in years. You'll notice a strange phenomenon. Money seems to come to you more easily now that you actually have it. This is because you are no longer acting from a place of desperation, but from a position of quiet strength. High-value opportunities tend to gravitate toward those who have the stay power to see them through to fruition. At 100K, you can afford to wait for the right deal, rather than jumping at the first get-rich glimmer. Let's talk about the rule of 72. At 7% return, your 100K will become 200K without you adding another penny in 10 years. If you do keep adding, the timeline collapses exponentially, turning years into months and months into weeks. You have successfully built your financial fortress, and now it is time to expand the territory it protects. Many people ask, what now? The answer is simple. You repeat the process, but with the wind at your back. The habits that got you to 100K, frugality, skill growth, and consistency, are the same habits that will get you to $1 million. However, you can now afford to invest in convenience to buy back your time and increase your creative output. This is the only acceptable form of lifestyle creep, the kind that makes you more productive and less stressed. We are entering a new era of digital wealth, where the old 40-year retirement plan is being disrupted by lean, efficient portfolios. Your 100K is a seed for a micro-family office, giving you the tools once reserved only for the ultra-wealthy. Use this moment to reevaluate your why, the deep emotional reason you started this grueling journey in the first place. Was it for freedom? For family? To prove to yourself that you could master the most difficult game on earth? Whatever the reason, hold on to it, because the next phase of growth requires even more mental fortitude. You will face new bosses at this level, complex taxes, estate planning, and the threat of overconfidence. Stay humble. The market has a way of humbling those who think they have figured it all out. Continue to be a student of the game, reading the works of the greats like Graham, Lynch, and Bogle. Your wealth is a garden. The first 100K was the hard work of clearing the rocks and tilling the soil. Now you are planting the trees that will provide shade for your children and your children's children. This is the definition of generational wealth, changing the trajectory of your family tree forever. Take a moment to look back at the version of you that started with zero. They would be incredibly proud of you. You have crossed the barrier that stops 90% of the population from ever achieving true independence. You are now part of the economic elite, not because of luck, but because of sustained, focused effort. As we wrap up this masterclass, remember that the numbers are just a scoreboard for your personal growth. The most valuable asset you've gained isn't the $100,000, it's the person you had to become to earn it. You are now a person of character, discipline, and strategic vision, traits that no market crash can ever take away. Spread this knowledge. Help others who are still stuck at the base of the mountain looking for the path. Financial literacy is the ultimate gift of empowerment that we can give to our communities and our world. The journey continues. The mountain is tall, but you have already conquered the hardest part of the climb. Stand tall, keep your eyes on the horizon, and never stop building the life you are meant to live. This is Fenora Finance Story, and we are just getting started on the road to your ultimate financial freedom. The barrier is broken, the sky is open. Now let's go and build something that lasts forever.